Good morning, good morning, good morning. Welcome, everybody. Welcome back. Welcome back. I hope you guys had a good weekend. That was pretty good. Spent working again, most of it, not all of it. Spent working, looking at the charts, examining the latest CFTC data, did all that stuff, did a report for members where we outline the positioning of the institutions and the most likely direction that we should expect the major currencies to head in, and gold and silver. Now, I'm not going to go into too much detail with what I reported on with members, but we're going to have a generalized conversation about the markets right now. And we're going to look at the current state of where price is, and then we're going to lay out some potential ideas for you guys. Okay, we're going to start the risk to riches challenge part 2. Part 1 was a success. We did very well, 136 or 138% return in just 10 trades. Not too bad for a percentage return on your money, right? So that was that. We did that just under a month and a half, I believe it was. So we're going to start round 2, and our beginning capital is going to be at about $1,700. We're going to start with $1,700, so we're going to see what we can work that up to. And I did some preliminary figures, and it's a pretty large number what we can bring it up to with just a 60% win rate, okay? It's not like we're trying to aim for 90% or 80% or anything like that. Just a 60% win rate, which should do well for us. Everybody can hear me okay? Good morning, good morning. Yeah, I can see your messaging now. Good stuff. Yeah, so let's start by taking a look at gold, shall we? Gold is been sitting at these highs and ranging for quite some time, not doing much. If we take a look at the daily time frame, you can see it quite clearly here. You see all that ranging. So I gotta be careful with this one. These are my thoughts, right? This is what I'm thinking. I gotta be careful with this one because, yes, do I think that over time it's going to break to the downside? Yes, I do. I do think that, but you know, at what point is it going to reverse from? Now, we were looking at the 4-hour time frame, and we had this really nice area of supply here, right here, and there is a good chance that we could have saw the drop take place from one of these areas. Okay, but that's not what took place. That supply zone was removed, price went a little bit higher, and now we're getting that push to the downside. Okay, so when you look at price action, you're looking specifically at the 4-hour time frame. There doesn't seem to be any rhyme or reason why price is moving the way that it is. So that tells me that I can't put a high degree of significance on any type of zone here on the 4-hour time frame if I'm going to be looking for a trade. Okay, so with that being said, we got to focus on another time frame, and specifically probably better to go up a time frame. And now I've already mentioned that the best way to trade this is to wait for this institutional buying zone to be taken out. That is the zone, okay? That is the zone that you got to be watching for. Because as you can see, price has already contacted this area several times before and respected it, right? So this is the zone that has to be taken out if you want to have a high probability move to the downside. So obviously there's quite a drop that would have to take place. That's why I was trying to take advantage of those 4-hour supply zones to short off of it, because I knew that there's very likely going to be a drop down towards this area of demand at some point. So, but those trades aren't working out, so I don't want to keep repeating the same thing if it's not going to be working. I got to be focusing on what is the higher probability. And right now, the higher probability is wait for that daily demand zone to be removed, and then there's your higher probability, okay? So for now, I'm going to be laying off of gold. I'm going to wait until something is clear, something a little bit more concrete in terms of a trade. Silver, very interesting one. I was examining the daily time frame, and I was looking at this imbalance here and trying to determine if I like it as a supply zone, institutional supply zone, or not. I drew it in because I said, you know what? I just want to take note of that and see if there's going to be some kind of a signal off of this area. And the way that price has just traded right through it as if it doesn't exist is telling me that it probably doesn't exist, okay? And as you can see, we have this imbalance here that existed before this area was removed. And so far, price is just trading right through it, okay, without any issue whatsoever. Now, I was also looking at one time frame below as this price was being contacted, and it just shot right through it to the upside. Now, I said if price is going to move from this area to this area, then definitely that daily supply zone exists. So we're trying to substantiate whether or not zones exist or not, okay? We do this when it's a tricky situation. I mean, that daily supply zone, if I had to rate the chance of it existing, is probably about 10% chance that it exists, which is very low. As price was approaching the area, it was higher. It was over 50% chance. But I needed to know whether or not it actually existed. So the expected move, if it existed, would have been up here. Price did not make that move to the upside. So now that supply zone is likely non-existent. And if it doesn't exist, then this demand here on the 4-hour time frame probably doesn't exist as well. And so with that being said, we need to determine what is playing out here on the chart. Well, I think one of the most important things here is that we have this institutional demand that came into play here. This is on the weekly time frame. We have institutional demand on the weekly time frame. Price shot up. They brought price right back to that area of demand, and it's been upward pressure since. So going short would be tricky because we have institutional buying taking place here at the lows. Do I think there's going to be bearish pressure on price? Yeah, I think there's going to be bearish pressure on price. More so when gold has that area of demand on the daily time frame removed. So I'm going to be very careful with this one as well. I see on the daily time frame we have these peaks here that were recently created, right? RSI extremely strong. And now take a look at this latest peak. RSI at 60, okay? We've got basing, we got a momentum candle to the downside. This is suggesting that more downside could be coming this week, all right? Now, if I wanted to take part in it, you know, it'd be tricky to take part in it. I'd be looking at an area here for a potential move to the downside. Oops. If price came down here, I'd be looking at this area here for a potential move to the downside. Okay, I'd be looking for signals on a lower time frame. That's one thing. Just a short move to the downside I'd be targeting. I wouldn't be looking for any type of significant move. Okay, so that's what I'm looking at with respect to silver. The dollar. So we had recent news. I didn't mark it on my dollar, but I did mark it on my euro. US negative, that was August 1st. Okay, so August 1st was this big drop. Oh, here it was. Here's the sign right here. Negative NFP, which caused price to drop. Okay, all that was happening, if you remember, is we had price reacting from the lows. Remember, we had the long signal down here, right? What happens with long signals is that it brings price to overbought territory, only for it to reverse back again. So, you know, the banks were accumulating a long position here. And when you look at the latest CFTC data, this is exactly what we're seeing, okay? This is why we collect the CFTC data and analyze it, because it can give you such insight. It's just remarkable. So we know that they're offloading short positions. We know that they're onloading long positions. But and we also knew that the daily time frame was a time frame that was in play. So focusing on the RSI on the daily time frame is what you want to be doing. So as you can see, they had a long signal, they bought, it becomes overbought, so they need to push it back, and lo and behold, take a look, US dollar negative, right? And the interesting thing is that when you look at the institutional positioning, look at my weekly time frame. If you've been following us for a while, you know that on my weekly time frame, if I have these red clouds surrounding price, that is an indication of a short cycle, okay? Meaning there could be an accumulation or distribution happening within those candles, right? If it's light colored before dark colored, that means it's an accumulation. If it's a light color after a dark color, that means it's a distribution. All right. So this is what we're seeing down here, distribution of shorts. And then down here again, we're in the short cycle. Okay. So if you have a short position and you need to offload that short position, you need to somehow trigger retail traders into wanting to go short the dollar, right? So they push price up, then they come out with negative NFP, and retail traders short the dollar. Okay. Now, you may be thinking, well, Kevin, are you saying that the banks created the NFP numbers that it would be negative? All I'm saying is that I've been watching the markets and studying the markets and looking at institutional positioning and institutional supply and demand for over what 20 no 13 years, give or take 13 years. And I've been seeing this over and over again, how the numbers just conveniently always help facilitate the moves that the banks need, okay, or the position changes or position shifts that the banks require. It's just uncanny how often you'll see the data supporting that agenda. It's just incredible. So remember, on the dollar, we have institutional demand that is in play right now. Okay, so this is dictating that a move to the upside is going to take place. Right now, if you look at my arrow here on the daily time frame, this is what I've drawn out. This is the path that I expect from price because institutional demand is in play. Now, will the path be perfectly straight like this? Obviously not. Okay, and keeping into consideration that the banks need to offload a short position, it's going to play out in a different way. I expect eventually for price to get up there, but what's the exact path price is going to take to get up there? That is the tricky question. Okay. What I can tell you is that this recent drop has retail traders selling. We have institutional supply that was just created, price dropped. We have another institutional supply here on the 4-hour time frame, and take a look here. Okay, so if pressure is building to the upside, which I believe it is, okay, you can see the RSI in the weekly starting to creep over and pass through the 40, okay, back to the upside. So it looks like we're going to get another push to the upside here, right? Obviously, daily supply needs to be removed for that to happen, but in order for that to happen, we need to see institutional selling zones on the lower time frame be taken out as well. So here's a selling zone that was contacted and held, and now we're coming into that area again. All right. So what does that tell you? Short-term selling, okay, because of this drop, institutions came in with short-term selling to get price lower. They rally price up into short-term selling. They sold again. Okay. Big emotional move here. Big emotional move here, all the way back down. And now we're coming back into this area. So what do you think is going to happen? Well, I'll tell you one thing. If this area gets taken out, that means short-term buying is going to kick back into gear. So obviously, if you want to trade this chart, you want to trade in the direction of the institutions. Okay. So, but understanding the context of where we are is also very important. If they're going to be short-term buying, you want to be short-term buying. If this area gets taken out, I'm a short-term buyer, period. Okay. So what I do is I look at my charts and I say, well, where is this going to go? If it breaks through that supply, we're likely going to see this area of demand break, or, you know, we could also be rallying up into this area of supply before the drop. So ideally, I would like to see this daily area of supply get taken out. Okay, so what I'm going to do is I'm going to put an X on my chart. That way, when I go off and take a look at the other major currency pairs and I eventually come back here, I know exactly what I was looking at and what needs to be taking place. For me, this signals if this area gets taken out, this continued move takes place, right? So I can also put a green circle representing buy and also the arrow, okay, like that, okay? So that tells me if this gets taken out, look for long trades because number one, on the 4-hour time frame, if that gets taken out, short-term buying is taking place, but short-term buying is taking place as it's entering into some supply, okay? This is very short-term, 4 hours. Short-term is daily time frame. So very short-term supply being removed to enter into short-term supply. So that could eventually lead to breaking through that supply, but I don't know that. So if you want to risk that, that's the risk that you take, okay? Higher probability is wait for this daily area of supply to be taken out, and then you know short-term buying is coming back into gear. You look at the weekly time frame, there's no obstacles there to keep price from heading higher, so it's likely that price is going to go upwards from there, okay? So I'm going to be focusing on the dollar, going to be focusing on the euro, okay? We are trying to get in short here, and you know, look at what's happening now, okay? I got some really good information to share with members later today about what I'm recognizing. Remember, the risk to riches challenge, we're testing out different ideas, different concepts, different theories, combining RSI with supply and demand. And our first batch of 10 trades was extremely successful, 138% or something return in 10 trades. Ridiculous. While we are testing, this is the testing phase. This is not, we've locked and loaded our system and we know exactly how to trade it and when to trade it. We're using concepts and principles that we've already created using supply and demand, and we're incorporating some of those in our understanding of how price should move with respect to the RSI, and we've been doing extremely well. So one of the signals was here to go short. I moved my stop loss to break even, and it looks like stop loss would have not been hit if I did not move my stop loss to break even. And now it looks like it's going to play out and eventually hit that target that I had. But hey, this is how it is. I wanted to protect my capital. I wanted to learn from the experience, but also protect my capital. So I did exactly that. I protected my capital, and now I'm looking at price action and I am learning from the experience, okay? I think this is a better trend line. I think this supply is more likely the supply that we should have drawn on the chart. Earlier we were looking at, what was it, gold, or was it silver? It was silver in that supply zone. Euro supply zone looks a lot better than that silver supply zone. I am expecting more downside here. We have been expecting downside for quite some time, but I want you to remember something very important. The banks are offloading short positions, sorry, long positions. This is why it's playing out in a difficult to read situation here. Here's what I'm looking at, okay? This is the big accumulation of longs all throughout here, and then some profit taking. And then an accumulation of longs, an aggressive accumulation of longs. So what's next? Some profit taking, okay? So they're going to have to take some profits on those long positions. And when they do, it's going to fuel and move to the downside. But the thing is that when they fuel and move to the downside from profit taking, we normally don't get a very specific path to follow, okay? When they're accumulating, they accumulate in a very strategic way, and we know exactly how they do that. When they offload, it's usually a little bit different than what we expect. So it requires creativity if you want to join in on the move. It takes a little bit of creativity and a little bit of a nuance to the the trade system that we use. So this, I believe, is the top. This is why I have the red circle here with the arrow to the downside and the green circle here, because I believe this is the top of price. Just like up here was the top of price and it moved down here exactly as we had anticipated. We expected that move to the upside to this area for another push to the downside, and so far that looks like it's starting to play out. Now it's just about timing the markets and getting in the right spot, knowing exactly where to put your stop loss. So this is looking pretty good. I'll be detailing some more information and detailing the entries and stop loss and all that stuff for members when I do eventually locate the area that I want to be shorting from. Looks like momentum is shifting here. Look at the 4-hour time frame. Look at the RSI. Okay, we didn't get a really nice basing candle here at the highs. This is a different type of candle, but look at that RSI on that push up. The RSI at what is that? 61. Yeah, RSI is at 61, and now push to the downside. So what could easily happen is a continued push until RSI comes into oversold territory. And that could bring you into demand, maybe see a short-term move to the upside and then break. Oh God, there's so many things that could happen here. Potential long trade from this demand zone, and then a push to the upside, get out of that long, reverse, get into a short. There's so many things that could happen here, okay? So just some things to think about. Great value comes out of these sessions. I'm glad you enjoy them. I believe they're extremely valuable as well. I'm trying to teach you a new way of looking at the markets here based on the reality of the markets, how the institutions are pushing price, how the institutions control price through their institutional buying and selling, and how the data is used to help them facilitate the moves that they've got coming on. Remember, right now, they're trying to offload positions. So remember that. Offload long positions, which is going to fuel a move to the downside. But again, they need to find buyers. Or they need to find buyers, people that are willing to buy, right? And when NFP was negative for the dollar, what was it? That was considered positive for the euro. So if you're looking for buyers, isn't it a good thing? Yeah, I think so. Anyways, I will leave you at that, a 24-minute session. If you like this session, great. Consider liking, maybe even sharing the videos with others so that other people can have access to this information as well. But just a like would be nice too. Make sure you subscribe, hit the notification bell so that you get access to our future sessions, and give yourself the edge in the trading that you need, okay? You need an edge in these markets. Otherwise, how are you ever going to pull profit from these markets, all right? Hit the notification bell. That way you get notified when we come live again. I'll leave you at that. You take care of yourself, and we'll see you in the Telegram channel. Take care, everybody.